Welcome back. Still tuned into Markets at Lunch, and 7840 still going strong.
Oh yes, going strong. In fact, at the highest point in the day as we speak, 7840, 7850 currently in sight. And it's good to see that the breadth is as much. Even on the futures and options side, it's just 18 stocks standing to the red line to a good 141 standing to the green. Let's bring on board then Ritu Arora to talk about which way the markets may be headed and get us a fundamental perspective on Street View at Lunch. Ritu, hi, good afternoon. Good to chat with you as always. What's the take then? Doesn't seem like the street is nervous at all ahead of the big Fed meet.
This is going to be a week where we'll see sharp movements. It's good to see that the market is not so worried today about the impending Fed event. But I would expect it to be a volatile week. In fact, the next couple of weeks will be where there'll be a lot of news-driven inflows into the market. And hence, we will see sharp movements, I worry.
Ritu, hi. Just wanted to talk a little bit about then the general market momentum, and we are seeing some sort of a reprieve come into the markets, but clearly what's standing out is the momentum in the broader end of the market that has been lasting for a couple of sessions. What's your view when it comes to handpicking stocks within the broader end, and do you think that this sort of outperformance is here to stay?
A relief was very much in order and much awaited. As you know, we've seen almost 8.5% correction recently. All the year's gains have been given away, and hence some kind of a relief had to be witnessed, and we are seeing that in the market, and I'm glad that it's across the spectrum. I think over the next couple of quarters, what's important is that one has a balanced portfolio, one sticks with quality, because there will be very sharp stock-specific, sector-specific movements and rotation, and hence it's a market where one would play it bottom-up and do very specific stock selection to make money rather than a secular sectoral allocation.
So Ritu, what looks like quality? Because one can't even term IT and pharma, because the last lap of the cool-off in the market, they too came off. So what's looking like it's going to stick by and one should stay put with that pocket?
So earnings growth is the best way to measure quality, and cash flow is the other one. And leverage would be the third aspect I look at closely. So relatively, one will have to look at market, of course, relatively, as you well pointed out. I still like private sector banks, a little expensive for entry sometimes, but from long term, if we look at economy turning around, banks will demonstrate it first, and private sector banks have the most sturdy balance sheets, margins still healthy, NPA pressures not there in the balance sheet. Automobiles, especially consumer vehicles, have been showing positive offtakes, though we do see an increase in discounts that the retail margins are being offered, but it's still a sector that I like. Relatively, capital goods selective investment in infra is what I'm doing. As I said, it's a stock pick market, and where there is clarity on order book or we see sturdy cash flows is where I invest in this sector, because this is the sector which will lead the recovery. To bring balance in the portfolio, I still like to have some consumption, IT and pharma stocks, because pharma again is a very wide sector, and within that there are many stocks very diverse from each other in their business models, and they are quite attractive from earnings perspective. We are saying this next couple of quarters are only going to demonstrate earnings in the market, and hence one cannot ignore the pharma sector.
Ritu, just wanted to, get in a perspective from you on liquidity flows, because day after day we're getting fairly accustomed to seeing that net sell number when it comes to FIIs. How do you expect the overall liquidity situation to shape up, and should we be worried at all?
I definitely worry about FII outflow, and the currency turmoil that we see can accelerate that outflow. Our domestic flows have kept pace with that, but history tells us that there are not very long periods where we see FII outflows which get matched or overshadowed by DII inflows. And hence, I would worry if we see FII outflows, if the DIIs will sustain it over long term. And I hope there'll be some stability after Fed in the next couple of weeks, and the currency warfare will kind of mellow down. Indian rupee is the best performing currency as of now compared to our neighbors, and hence it worries to see this kind of outflows.
Ritu, is the market still working with the assumption that China may actually throw a rabbit out of the hat, or does it seem like the market is sort of eased post the comments from the Chinese premier on the sidelines of the G20 meet that the yuan is not going to get devalued any further and they're not going to really throw out any tool out of the box, and the fact that this, the bubble in the stock markets has been arrested so far?
I think desperate times require desperate moves, and I don't think that we've seen the end of what China would do to revive its economy, to revive its exports, domestic consumption. And I believe that the problems are a little deeply seated. And I would not be surprised if I continue to see the measures could be of different nature. We've already seen 4 rate cuts coming in China, and now devaluation of the currency. So the measures could be different, but I think they'll continue to be there from China.
What's the view when it comes to the overall metal space? Because, some sort of a shot in the arm coming in today for some of the steel majors as the Committee of Secretaries approved that 20% safeguard duty on steel. Do you think that by and large sentiment in the sector on account of the global volatility does remain a tad cautious, or are things on the brink of seeing a turnaround?
I definitely remain cautious on commodities and metals in specific because we don't see a demand revival globally, and hence there will always be a glut available, and of course so imports might be more expensive and difficult, but there's no real turnaround story for this sector or stocks at this point in time.
Ritu, always good chatting with you. Thank you so much for taking the time out and speaking with us.
Thank you.
That's the view then from Ritu Arora. Let's also get in perspective